motor vehicle insurance cover. This is insurance for cars, trucks, motorcycles, and other road vehicles. Its primary use is to provide financial protection against physical damage or bodily injury resulting from traffic collisions and against liability that could also arise from road incidents. Common terminologies used in motor vehicle insurance. Insured policyholder, the person or entity that holds the motor insurance policy and is entitled to the benefits and coverage provided by the policy. Insurer, insurance company, the company or organization that provides the motor insurance coverage and assumes the financial risk associated with the policy. Premium, the amount of money paid by the policyholder to the insurance company in exchange for the motor insurance coverage. It is usually paid annually, semi-annually, or monthly. Deductible, excess, the amount of money that the policyholder agrees to bear or pay out of pocket before the insurance coverage applies. For example, if the deductible is KH 500 and the claim amount is KH 2000, the policyholder is responsible for paying the first 500, and the insurance company covers the remaining KH 1500. Claim, a formal request made by the policyholder to the insurance company for compensation or coverage of a loss or damage as per the terms of the motor insurance policy. No claim bonus, NCB. No claim discount, NCD. A discount provided by the insurance company to the policyholder as a reward for not making any claims during the policy term. It encourages safe driving and is usually applied as a reduction in the premium for the subsequent policy term. Endorsement, a modification or amendment to the motor insurance policy that alters the terms, conditions, or coverage provided. Endorsements can be added during the policy term to address specific requirements or changes requested by the policyholder. Total loss, if the insured vehicle sustains significant damage, with repair costs surpassing a set threshold, typically a percentage of its value, or if it's stolen and not found, it qualifies as a total loss. In these situations, the insurance company reimburses the policyholder for the vehicle's actual cash value. Exclusions, specific situations, conditions, or events listed in the motor insurance policy where coverage is not provided. Exclusions may vary depending on the policy and can include acts of war, intentional damage, racing, or driving under the influence of alcohol or drugs. Renewal, the process of extending the motor insurance policy beyond its expiration date. The policyholder needs to renew the policy by paying the premium before the current policy term ends to ensure continuous coverage. Types of cover: 1. Comprehensive insurance cover. 2. Third-party insurance cover. 3. Third-party fire and theft. Tuft. 1. Comprehensive insurance cover. A comprehensive car insurance cover is not a mandatory cover, but it is the most preferred by Kenyans. This cover offers full protection to both parties in case of an accident. A comprehensive insurance covers the following benefits: accidental impact damage including overturning and collision. This a type of insurance coverage that protects a vehicle from damage caused by unexpected and unforeseen events, such as collisions, theft, vandalism, and natural disasters. Accidental fire damage. Your accidental fire insurance covers fire damage to your vehicle, depending on what caused the fire and the coverages you carry. I2 theft/partial theft cover. This covers all cost accrued due to attempted theft or successful theft of the insured vehicle. 3. Third-party liability cover for bodily injury and property damage. This is a type of coverage that financially protects you if you're considered responsible for damages or injury to another person or their property. Windscreen cover. Windscreen cover insurance allows you to replace damaged windscreen glass without having to pay a large excess should it become cracked, chipped, or broken. I2 entertainment system cover. If your vehicle's entertainment system is stolen or damaged, the insurance covers the cost. In the event the cost of replacement is higher, you will need to cover the additional cost. Emergency medical expense cover. Emergency medical can reimburse the costs related to treating unexpected illnesses and injuries while traveling, while medical evacuation can provide coverage for transportation of a traveler to a nearby medical facility in the event of a medical emergency during their trip. Courtesy car/loss of use cover. A courtesy car, supplied by your insurer or garage during repairs, is vital if you rely on your vehicle. This coverage provides a replacement car if your car's accident-related repairs require a garage, usually offered even for accidents you're at fault for. Note that a total car write-off might not be covered, thus needing the return of the courtesy car. Not all insurers provide one for theft, but you can explore hire car coverage or an extension for a replacement car. This ensures access to a rental car for theft or write-offs. Excess Protector. Excess protection is an additional cover option for your main car insurance. Typically, it allows you to claim back your full policy excess on one insurance claim during the year-long life of the policy. There are two types of the Excess Protector, namely I. Excess Protector for own damage, 2. Full Excess Protector, own damage and theft, car insurance claim example. Consider a car valued at KSH 1 million insured under a policy with the provided excess terms. In case of an accident, if repair costs amount to KSH 200,000, lacking this protector would entail the insured paying 2.5% of the vehicle's value, totaling KSH 25,000. However, with the excess protector, the insured pays nothing, as the insurance covers the entire repair cost. Below excess. The excess protector presents a minor issue when repair costs fall below the specified excess for the vehicle. For instance, in the provided example, with repair costs at KSH 10,000, the insured client covers the repair expenses, being below the minimum excess of KSH 20,000. Similarly, if repair costs were KSH 24,000, the insured still pays for repairs since it's above the minimum excess but below the vehicle's excess value of KSH 25,000, 2.5% of KSH 1 million. Cost of excess protector. Most car insurance quotes provide basic coverage without the excess protector, allowing you to add on options like political violence coverage, personal accident cover, and more. It's important to review your quote thoroughly and ask your broker for clarification. The excess protector for own damage typically costs between 0.2–0.5% of the vehicle's market value, with a minimum premium of around KSH 1,500. The comprehensive excess protector, covering own damage and theft, ranges from 1.5% of the vehicle's value with a minimum value of KSH 10,000. Note, when securing car insurance, compare options as many Kenyan motor insurers omit excess protectors due to persistent high claims losses. Few even offer this add-on for PSV cars on ride-hailing apps like Uber/Taxify/Little. This compels clients to share repair costs for accident claims, promoting vigilant driving. Note that after using the excess protector for claim-related repair coverage, it's considered used and must be reinstated on the policy at the current market rate. Political violence and terrorism cover. This covers physical damage to property resulting from war, civil unrest, and terrorism. Thank you for watching Part 1 of Motor Vehicle Car Insurance.